One of the biggest financial decisions you're ever going to make isn't just about where you're going to live. It's about whether renting or buying will set you up for long-term success. And this is a decision you're likely going to face multiple times over your lifetime. So with real estate prices skyrocketing in many cities experience very unpredictable markets, more people are questioning the traditional path of homeownership as the ultimate financial goal. So choosing between renting and buying isn't just about crunching numbers. It's about understanding what's right for your financial future. So today I'm going to break down the 3 critical factors that will help you make the best decisions for your lifestyle and your wallet. So if you're wanting to learn more about all things financial literacy, please subscribe to the channel. We put out great content every single week. All right, so renting versus owning is a question that I get all the time, and is one better than the other? Now, it all depends on what your current situation is. I am a real estate agent. You guys know this now, and I am not one of those realtors that's always going to tell you every time is a great time to buy and shit on people who are currently in a rental situation. There are many times where renting is actually, in the short term, not a bad idea. But just realize long-term owning real estate, hopefully owning multiple properties, whether they're residential, commercial, multifamily, industrial, whatever it might be, is a terrific long-term wealth building strategy. Being a homeowner or owning real estate, those people have roughly 35 to 40 times higher net worth than renters. So if you're someone who thinks, I'm just going to rent forever, I would not recommend that. And that's where I start to question people about renting. You may not be ready to buy a home at the moment. So again, renting is not necessarily a terrible thing. And what you need to know is there's some definitely different out-of-pocket costs. So let's start with renters first. Typically, if you're a renter, you might need 1 month security deposit. Maybe you need first and last month's rent. Maybe there's some other deposits you might need. But typically, whether you're renting a house, a condo, whatever it is, if something goes wrong, you're going to reach out to the homeowner, you're going to reach out to the property manager, and they're going to take care of it. Some renters may not be aware of this, but if you broke the chandelier or you damaged something that is not like a maintenance or deferred maintenance type of item, as the renter, you're still going to have to pay for those yourselves out of your pocket. Typically, whatever your rent is really the most you typically should spend every month on that particular place. But what people also have to understand is when you are a renter, and my team does property management as well, so we deal with this on a regular basis, is just because you want to stay in a property doesn't mean you get to. And you also can't do whatever you want to the property. So if you're someone who wanted to paint walls or do something with the landscaping or upgrade some features, if you talk to the homeowner, they might let you do it. But you have to realize when you move, you just upgraded their property and not your own. So it's one thing you need to be very careful with. And another is, if they want to sell the house and your lease is getting ready to expire, you might have to move. And I know a lot of times renters, that's their biggest gripe, is they don't want to move because maybe they've been locked in for a long time. The owner isn't charging them an outlandish current market rate rent because it's been a win-win situation because they've been really good renters. But at some point, these owners don't want to keep these houses forever. So just know you potentially, when your lease expires, could be forced to move even if you didn't want to. Now, if you're someone who's thinking about buying a home, there's obviously a lot more upfront costs. Now, there are home loan programs for 0% down or 3.5% down, but in today's climate with prices where they are, your payment is probably going to be pretty high and pretty unaffordable for most people on current incomes if you're putting minimal payments down. But between the down payment, you need closing cost money. There's going to be some potentially other expenses when you first move in, some things you might want to change, upgrade, whatever the case may be. You're going to need a lot more money up front in order to buy that home. But you, of course, then get to do whatever you want with the property, as long as you're not an HOA that tells you there's certain things you can't do. So there are some pros to that. And of course, when you buy, you have to be thinking about, am I going to be living in this city for the long term? Because buying a home, typically most of my career, it wasn't I buy a home and a year or two later it was worth $100,000 or $200,000 or $300,000 more, which has happened a few different times over the last 20 years. But if you're moving to Reno, this is where I live, and you're in a situation where you might be coming here for school, or maybe you're on a job that's only supposed to be for a few years, not saying you couldn't or shouldn't buy a house, but we might want to look at it more as potentially a good rental property, make sure the payment's low enough so that we could typically rent it out. All these big gurus have all different kinds of thoughts on home ownership. So let's talk about a couple of these different people that have different feelings on should you buy versus should you rent. If you're someone who's looking to up your game in your financial literacy, click the link in the description below. It'll give you our list of the top 11 things to get you started on your path to financial freedom. All right, so first let's talk about Dave Ramsey. Everybody talks about Dave Ramsey. What I like is Dave knows long-term you should own real estate. Of course, he's wealthy enough now to tell people he should buy homes cash, and that's what he does. But in his perspective, he wants people to put 20% down on a 15-year mortgage and then have not that payment be more than 25% of your income. And in today's real estate environment, it's just not a very realistic situation to be able to put that little of a down payment on a 15-year mortgage and only have it be 25% of your income. I think that's super conservative. So again, it's sitting down, looking at your numbers, looking at your budget, talking to a lender, going and figure what your price point's going to be and what houses and what parts of town can you live in and see if that makes sense for you. When I listen to other gurus, we have Ramit Sethi. We've talked about him before in some other videos about he wants to be a renter. He's currently a renter, and he thinks home ownership long-term is not a good investment. And he says someday he'll buy a house, but he said he shouldn't because it's not a good investment. But I've always said 90% of people that became wealthy did so through real estate. So I just don't agree with what he's saying. But his philosophy is this, is he was saying in an apartment building that he lived in that he was renting unit A for $3,000 a month. And the people next door bought unit B, which is the same unit with the same view, as basically as identical as two properties could be. And their payment was $6,400 a month. And then what he would do is take the $3,400 difference and invest it. I've been dealing with buyers and sellers now for 25 years. And there are very few people that if they could afford the $6,400 was going to buy something or rent for $3,000 and invest the difference, they're going to go and buy something. And so long-term, I think this whole renting and investing the different strategy doesn't work because right now, a lot of times the rent is so expensive and it's going to continue to go up and it's been jacked up for over and over that it just makes no sense. Where if you get a 30-year fixed rate mortgage or 15 if you can afford it, that payment's locked in. Yes, property taxes could go up. That number could change a little bit, but that rent, it's only locked in for the length of your lease, which might be 6 or 12 months, and they can keep raising the rent on you as much as they want to. So it's not like all of a sudden you're locked in at this rent that's going to be there forever and ever and ever. All right, the third person that talks about this a lot is Graham Stephan. I'm sure many of you guys know him through YouTube. And he argues that in many, many cities, currently it is cheaper to rent than own. And yes, if we're talking about the major cities like the San Franciscos and LAs and New York cities of the world, where a lot of those guys, Ramit Sethi, lived in those cities as well. Yeah, it can be dramatically less expensive to buy than to rent in those cities. But again, the people that we're talking to, you're probably not going to be able to afford any of those places. Most people that are homeowners in these bought 50 years ago, and now their homes are worth 10 and 20 times what they bought for them in the 70s and 80s. So these major cities, yes, that is true, but it's not really the people that we're talking to. We're talking to many people like in the Midwest or in other parts of the country where you can still buy a home for $150,000, $250,000, and you can make these numbers work for you. So when you're thinking about pros and cons of renting versus buying, there's a lot of things that we need to look at. And again, part of it becomes is how confident are you about your current income? Do you want to potentially stay in the same residence for 7 to 10 years at a minimum? At least that's the plan. Things could change, but you have to be planning for that. And knowing that it's not always the best time to buy, and it's not always the best time to rent. But as an overall long-term wealth building strategy is what we're always trying to tell you guys about. You have to at some point own real estate. So if you live in one of these super expensive markets, that it is a lot better for you to be a renter than a buyer, it doesn't mean you can't go out and buy investment property in another state. I live in Reno. I've been selling real estate in Northern Nevada for 25 years, and even I own real estate in other markets. So between long-term retirement accounts, between the primary residence you live in, between owning real estate or other types of real estate, not just residential, in other parts of the country where you live, it's a way to have a well-rounded portfolio and a way to be able to have income coming in other ways. Now, if you're someone who owning rental property freaks them out, doesn't want to deal with property managers, doesn't want to be a landlord or deal with tenants, I get it. With the right context and the right lenders and the right realtors and the right property managers, you can make these things work with minimal time, energy, and effort. I do this. I own homes, like I said, in the Midwest, and I deal with them probably anywhere from 15 to 30 minutes a month on occasion if something comes up. But again, we'll talk more about how to do those in another video another day, but just know your situation is specific to you. So reach out, ask the questions, and no, don't let anyone talk you into buying if you're not ready. Don't let anyone talk you out of renting in the short term if you're not ready. There are pros and cons to both, and hopefully we helped you understand a little bit about those today. But like I said, your situation is specific to you. Reach out, ask the questions, send me a message, an email, and we're happy to see how we can best serve you and help you figure out your current situation. If you're someone who's thinking about, am I ready to buy my first home or even my second or third home? Check out this video we did about the 8 financial rules you must follow so that you'll know whether you're ready.